Hey everybody, Boris VK Force. Welcome to the weekly technicals for the commodity dollars for Aussie dollar, dollar CAD, Kiwi dollar for July 23rd, July 27th, 2018. And as always, the COM dollars were sort of the modest anti-dollar bid as the end of the week came in. They're always going to be the low volatility choices, though dollar CAD, as usual, it's very much its own unique story. The news actually was relatively good. Australia had a blowout labor numbers. Although it's still not indicative of whether they're going to be very, very strong as far as translating into strong wages and whether that will tip the RBA more towards a more hawkish posture. For now, I think they remain dead set into a neutral zone. One of the things that I think weighs on the whole commodity complex is the fact that hard commodities, especially prices of iron ore, are actually trending lower on fears of trade war, lower investment, and just sort of a cooling of global growth as a result of the tariffs that are being set all across the world. So the commodity dollars, especially if you want to trade the pro tariff or the quintessential poster child for trade war fears is Aussie yen. And this week it was very, very indicative when we had lots and lots of trade concerns. Aussie yen really got hammered, and then it came back up as some of those concerns eased. They may return, and we'll take a look at Aussie yen actually in our crosses section. But the point being is that the commodity dollars are really now a reflection of a lot of the trade concerns and are trading very much on their own dynamic. Nevertheless, they managed to really bump up as the week came by on a essentially anti-dollar sentiment across the board. The levels pretty much stay the same. The key thing I think this week that really proved itself very valid is that the levels from last week really held. The 73s held in Aussie, the 67s held in Kiwi. Dollar CAD as its own story had much better than expected data at the end of the week, and in fact I think is a very, very interesting trade to the short side on dollar CAD, to the long side CADI, as I believe it could have outperformance on the assumption that Canadian economy really doing much better than anybody thought and puts the Bank of Canada into this continuous rate hiking mode. Certainly, I would almost argue as much as the Fed at this point. So really the only two major G7 central banks that are in a continuous hiking mode is the Fed and the BOC, and that's got to weigh for something for the Canadian dollar. So I think it outperforms as we go forward because the data really certainly was quite good. We'll take a look at the charts in just 1 second. When we look at the calendar, it's very quiet on the COM dollar front. There really is nothing much. We have New Zealand trade, Australian CPI. Australian CPI is probably the only interesting driver this week as far as trade goes, and we're bullish the CPI number because there's been a rise in consumer expectations. Whether that's going to be hot enough to change the minds of the RBA remains to be seen. It has to really, I think it has to pop above the 2% level for the markets to get excited. But it's enough maybe to keep the Aussie well bid and floated as we go through the week. Let's take a look at the charts here, and we'll see what I'm talking about on all the COM dollar front. And I actually want to start with the most interesting of the biggest mover this week, which is the CAD. And let's go backwards. Let's take a look at the monthly charts, because I think the monthly charts are showing, first of all, it's interesting when you look at the monthly charts how we have a series of failed highs that are continuously lower. And I think if you're trading on a sort of a longer term pro CAD point of view, your natural level is this 34 level. That is the absolute key level. That gets taken out to the upside. That really shows a much more positive structure for dollar CAD, a much more negative structure for the loonie. Until that level breaks, you could almost sort of assume that the CAD strengthens. Now, these are the monthly levels. As you can see, on the weekly levels, the stuff gets a little more granular. And we've had a very interesting, very pro-Canadian dollar weekly candle. We basically went to the highs and ended up nearly to the week's lows. That's a very, very bullish candle to the Canadian dollar, or bearish dollar CAD candle. The key thing, though, of course, is that we're just sitting at this massive support at the 31s. And if we look at the daily level, right, there are some encouraging signs. We took out the lows of the prior 2 days. But we're dead stopped right over here. This is just the absolute key level to look for, which is the 3100s. If Loonie can take out the 3100s, it really opens up scope towards the move towards the 130. So, Loonie being what Loonie is, it can retrace. It can go up, back up to 32s, of course. I think at this point, it's very reasonable to sort of assume that, at minimum, the risk scenario here is 33. The true risk scenario is 34. Overall, it's a sell the rally trade if you can get any kind of bounce up here. But generally, looking at the chart, looking at longer-term charts, it really feels like we're going to be able to distribute all the way down to the 130. If we get any kind of additional anti-dollar flow, it certainly helps it. The one thing that stymies Loonie, of course, is oil. Oil is off the highs. We're at 68. We took a dollar off the highs. If it gets down to 65, that's certainly going to stymie the Canadian dollar for the time being. But what's interesting is that the economy is doing well irrespective of oil prices, and I think that's an important takeaway. So you got to be a bull, the Canadian dollar, at very minimum until 33s, and if you're a longer-term trader, maybe to the 34s, looking for at minimum to get to 30, and then possibly maybe even longer-term levels towards the 27s as we go forward. Aussie, a much more muted affair. You can see that the 73s really held. Nice, powerful candle. Still couldn't take out the highs from the day prior, so that's a little bit. That requires a little bit of improvement, but nevertheless, it's a pretty strong candle, and it's actually, I think, an interesting, as I look at this right now, and I consider the fact that CPI is likely to be hot, that we have generally an anti-dollar sentiment going into the week. The one thing that could sabotage this, of course, is a massive decline in iron ore prices, just sort of a commodity fallout that would be an idiosyncratic factor that could affect to the downside. But assuming that we don't have any significant movement on the commodity front, just the pure flow here and the economic data being positive could certainly take us to a test here around 70, basically 74.50. But more importantly, I really think that it could propel us all the way out towards the 75. That's the big area where we make the move. If you notice how Aussie moves, the general pattern here is you'll have the bottoming out, sometimes correction, holding the bid, but then you just have a couple of days of consolidation, and then it takes 3 or 4 days for the trade to kind of develop here, because Aussie is a very slow-moving trade. But inexorable move here, to me, seems to be to the upside, unless we get completely handicapped. What would completely change this structure is, of course, taking out of the 73s. Up until that point, it's still a very legitimate trade with an upward tilt. That's how I'm looking at Aussie as the week starts. Kiwi is just simply the minor version of Australia. There isn't any. Well, we do have trade data out of New Zealand that'll be interesting to take a look at and see. But basically, I think they're trading very much in tandem at this point. Kiwi did make a mildly higher low here, so that's generally positive. We took out yesterday's highs. That is also mildly positive in day's prior's highs. The operating resistance here is 68.50. And 69 is the much stronger resistance here. So smaller scope, but still same kind of a thing. It has a chance to drift towards the 68.50s on open of trade in Asia on Monday. So that's pretty much how the COM dollar is set up. Wish you guys the best of luck, the best trading. Boris Schlossberg, over now.